Good afternoon and welcome to NYFP. On this Wednesday afternoon ahead of the Thanksgiving Day holiday, U.S. equity markets are trading mostly flat. Joining me today is Sandra Navidi of BeyondGlobal. Sandra, good afternoon and thanks for joining me today.
Thank you for having me, Remy.
Well, ahead of the Thanksgiving Day holiday, a lot of U.S. consumers are looking forward to shopping on Black Friday. Now, the holiday season does kick off with Thanksgiving. And according to the National Federation of Retailers, they do forecast retail sales to increase by 4.1% this year. But what is your outlook for the retail sector?
Well, that's still less than last year. On average, consumers are going to be more cautious because they have 10% less disposable income. They're afraid of tax increases. Many of them still live paycheck to paycheck. They're afraid of the fiscal cliff, and they are aware of the fact that the economic outlook is moderate at best.
And on the other side of the Atlantic, we did not get a debt deal regarding Greece. We did see the Eurozone finance ministers as well as IMF and ECB meet in Brussels. But there is another next meeting coming up on Monday. So when can we get an agreement?
It's uncertain because the divisions are very steep, and we've now come to the point where it's clear that the taxpayers will have to cover any shortcomings, and Germany does not want to concede a cut in debt because then they would have to disclose that to the taxpayers. So that's likely going to be dragged out for a little while longer. But what Chancellor Merkel has just said, something that we have been saying for the last few months, is she said explicitly that it's a political decision that Greece will be kept within the euro for another couple of years. So I think what's going to happen is another muddling along.
And on this side of the Atlantic, there's focus on Bernanke's comments yesterday when he spoke at the Economic Club of New York. He did bring up the fiscal cliff as well, and his take was not all that positive, and he also brought up the word recession. But what is your outlook given that we are fast approaching that deadline?
Even a few days ago, we heard signs of compromise and moderation, so it seemed to be a good sign, but nothing has happened so far. There are no signs of a tangible agreement. There are no concrete proposals that have been exchanged, so we're getting dangerously close to the edge, and a last-minute agreement could also trigger a spiral down in the market. And even best-case scenario, there are going to be cuts next year, and so that's going to take money out of the economy, and there's still a high risk of recession, and at least 1% of GDP growth that may be reduced.
And Sandra, last but not least, before we wrap it up, speaking near term, tomorrow we will be getting a handful of flash PMI manufacturing figures out from China as well as over in the Eurozone. But how do you see this affecting the markets overseas?
Well, I think it's going to underline what everybody is already thinking, that there is a synchronized global slowdown. Numbers from China are always a bit opaque. It's a question of how trustworthy they are, but I think that signs of a further slowdown there are showing, and of course an increasing recession in the Eurozone. So I think it's nothing new. It's sort of probably baked in to some degree.
Okay, Sandra, well, thank you so much for joining me ahead of the Thanksgiving holiday, and have a great holiday. Thank you.
You too, Remy.